Hello folks, this is Alessio Rastani here. I would like to show you in this video how we would go about buying shares and selling them online using an online discount broker. I've had a few mentees of mine asking me how essentially we would go about trading shares or buying and selling them online. So I have over here my online discount broker, Options Express, open. Once you've opened your own account, what you can do then is essentially you just go on this tab that you see here, and you just choose the one that says stock. Once you press stock, then this page will open, as you can see here. I'm not going to take you step by step through the procedure of how we place a buy order to buy some shares. In this example, you see here, it asks for the stock symbol. So the stock symbol I'm going to choose here is going to be Microsoft. No specific reason why I'm choosing Microsoft. It's just this example I'm doing. If you don't know the symbol of your stock, all you gotta do is go on this function here, it says find symbol. Now, so action, what do you want to do? You want to buy, you want to sell. I'm placing a buy order, so let's buy. Quantity, so I'm buying, let's just say 100 shares. Let's keep it a round, simple figure. I'm buying 100 shares of Microsoft. Next bit says market. Now you see a number of different options here, so I'm going to take you quickly through what these options mean, just a few of them. The first one, buy market. Essentially, if you place a buy market order, you're saying to the online broker, I'm buying those 100 shares of Microsoft, whatever the price I'm offered right now. So whatever the current market price of Microsoft is right now, whatever the trading price is, I'm buying it at that price. Now, if you look at the bottom of the screen, what you notice here, it gives you the information about Microsoft shares right now. So if you can get this, by the way, by just going on the box here and typing the symbol of your stock and just pressing go. Notice here it says the last trading price of Microsoft was $30.02. Over here is the bid and the ask. So the asking price for buying Microsoft shares right now is $30.07. Now, I should just stress this. I don't use market orders. I don't like market orders. They tend to be essentially, I want to exercise some control about what price I want to buy my shares at. Let's go through the next one, limit order. When you choose a limit order, what you're saying essentially is you're saying to the online broker, I want to buy those shares of Microsoft at a lower price than $30.07. So that means your limit price, whatever price you put into this box here, must be lower than the current asking price for Microsoft. The current asking price for Microsoft is $30.07. So I'm going to say I'll buy them at a lower price, at a cheaper price, at let's say $26. So that's $26 typed in there. Okay. Why would you do that? Just out of curiosity, you're wondering why would you want to choose a lower price? There are, for example, there are traders who buy, for example, at pullbacks. You might have, let's say, for example, you have a stock that's going up like this. Some traders, for example, say, well, I'm going to buy them when they pull back to a lower price, like, for example, pull back to a trend line or pull back to a moving average, for example. That's the reason why those traders would use a limit order to buy at a much lower price than the current price. Now, let's go to the next one. So now I'm going to show you what this one is, buy stop. If you choose a buy stop, you're saying to the online broker, I'm going to buy those shares when they're above $30.7. So this means the amount, the price that you put into this box must be above, higher than $30.07. So I'm just going to choose $32, for example. Now, why would you do that, if you're wondering? These stop orders are usually used by momentum traders, breakout traders, you might have heard of them. For example, let's pretend that, let's say Microsoft shares are trading in a range, oscillating, going sideways like that, not doing much really. Now, let's say you got your resistance level at the top here and you got your support level at the bottom here. Now, a momentum trader or a breakout trader can say, look, I'm only going to buy those shares when they break out through that resistance level. Now, if this resistance level, let's say it's 30, then I'm going to buy them only when they're at 32. when I've seen some serious upward momentum in the stock. Now, that's essentially what the stop order is there for. The next bit here is stop limit. I should just say I don't use stop limits purely because they're too restrictive as to the price that you want to trade with. They also come with some major disadvantages, which I don't have time to go through in this particular video. But I should just say that I don't typically use these stop limits. We'll go through that for a separate video and a separate training video. Okay, now the next bit is I'm going to choose the good until cancelled, which means essentially this order will remain in place until I manually close it myself. We can leave the same as default as it is. Advanced orders, I should just say again, I don't particularly use these advanced orders. The first one says trailing stop. If you want to trail your stop loss automatically. Now, I would like to say that I don't automate my trailing stop losses. I do use a trailing stop loss, but I don't automate them using this function. I prefer to manually trail my stop loss. The only other one I use here is probably this one. One triggers other stock. Now, I should just say that you could use this if you want. You don't have to, but I'll explain this to you a bit later in this video. So essentially now that you've chosen your options, so you're buying 100 shares of Microsoft at a stop, $32. So what you're saying is you're buying them at $32 or above. Then what you're going to do next is just press this button, preview order, and once you press that, it'll take you to another page to just preview your order, and then you just press submit. Alright guys, now we've done that, the next thing we're going to do now is we're going to place our sell order on the same stock. So go back and just type in Microsoft, select sell. So now notice what we're doing here is we're placing our stop loss. In other words, we're placing our protective stop loss or protective sell order just in case the share price went against us. So quantity, again 100 shares, and sell stop. And what you're saying is, okay, I want to buy. Notice we bought them at 32, so I'm going to say we're going to sell them. Let's say if they come to 29, which means your risk here is $3. And yes, again, good until canceled, and I'm going to leave it as none. Okay, let me show you now why we would use this one triggers other stock. What we can do in this situation is, let's say for example, you bought the shares at $32. The idea behind one triggers other stock is you can link your stop loss to your buy order. So essentially, if you're buying shares at $32, which is your buy stop, you can link this to your stop loss of 29, link them together. Why would you do that? Because that means as soon as your buy order is triggered, as soon as your shares of 100 shares of Microsoft have been bought, automatically your stop loss at 29 will come to effect. So this is a good idea for linking both orders together rather than doing them separately. Okay folks, so what did you think of this video? Was it helpful to you? What is your opinion overall? Please leave me your comment by posting me your comment below. Also, if you want to get more videos, if you want to see more videos like this in the future, please subscribe to my channel. And you also have my full permission to embed this video into your blog. So feel free to do that. Thank you for watching, and if you want to find out more about myself, you can go on and visit the links that you see on the screen right now.